This is episode 74 of the Andrew Hines Real Estate Investing Podcast. Welcome to episode 74 of the Andrew Hines Real Estate Investing Podcast. Today, I have another great guest. Can't say enough good things about the guy, Rob Brake. He came on the show. Rob, you might recognize that name. He's the host of a very popular Canadian real estate podcast called the Breakthrough REI podcast. Rob is co-host with Sandy MacKay, who was recently on this show as well as many members of his team. In this episode, Rob really digs into responsible growth. We had a very candid chat about our philosophies, our views on growth, and balancing both wanting to grow, but also wanting to have quality of life and understanding that bad decisions in real estate can come back to haunt you. I'm speaking from experience on that one. So we got into the various different types of real estate that Rob invests in, why he invests in those types of real estate, and we also got into a specific case study of a new student rental project that he's doing in the Peterborough area, where he is expecting $3,500 a month positive cash flow when he's done. That's right, $3,500. I have not heard of anyone doing that on a single family home, and that is his plan. So it was really great to dig into those numbers and see just exactly how that works out. We also talked about how he came across that deal, the fact that other people didn't see the value in it and he did, and he ended up pulling the trigger on it. So again, I can't say enough good things about Rob. He's a really interesting, really smart guy who started as a truck driver just listening to American podcasts, eventually got to the Durham REI meetup, eventually started meeting people like Sandy MacKay, and his circle, his sphere of people in his life all became real estate investors, or mostly became real estate investors, and it just snowballed from there. So I really do think you're going to enjoy this episode. I know it's well worthwhile to get to know Rob and get to know his story. And then, of course, you can listen to he and Sandy on the Breakthrough REI podcast. Just before we get into today's episode, I want to ask you to please take a moment to rate and review this podcast on Apple Podcasts or wherever you listen. If you're on YouTube, please leave me a comment, hit the like and subscribe button and the notification bell. It will help more people to find the podcast, and it will help us to stay connected. Thank you so much for continuing to follow this podcast. Without further ado, here is Rob Brake. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I have Rob Brake on the show. Rob, you might recognize that name. He hosts a very important podcast here in Canada. Rob, first off, thanks so much for doing this.
Yes, it's very important. Thanks for pointing that out.
Very important.
No, thanks for having me, man. This is awesome. I appreciate you having me on. I'm looking very much forward to this.
Yeah, we've been talking about this for like a year plus. So
we have. You like to interview people in person. I don't like to go anywhere. So that's where the conflict has come in.
And I would, sometimes make the trip, but the cross Toronto route is a treacherous one for traffic mostly. Yeah, man, you've done so much over the years. I remember listening to your podcast before I even really knew what podcasts were. Somebody said, listen to this podcast. I'm like, what's a podcast? And then, I found your podcast. You were sharing all kinds of wisdom on Canadian real estate investing. And for those who aren't familiar with the story, Rob, why don't you just tell them kind of how you got started in that and how that led into real estate investing, or, the two together, I imagine, went together.
Yeah, sure. Well, I got started pretty much the same way that everybody does. My parents set up a trust fund for me, and then I bought a bunch of properties and went from there.
Was that a joke?
No, it was a joke. Well, no, I did start out the way that most of the people, at least that we in our circles start out, which is no money at all. And just figured out a way to make this work, right? So when I was growing up, my parents, the only way we ever got anything was if you had enough cash to actually go out and buy that item, whatever it was, even if it was a car, where there was no financing, like nothing, there was no, so I learned almost the same way as, poor dad from rich dad, poor dad, mm-hmm. Right? So that was the way I was brought up. And no, the way we got into it was, we were looking for a place, and my friends, right next door to them, there was a duplex for sale. And we didn't buy it because it was a duplex. We just bought it because it was a house that was next door to some friends of ours. We thought that would be cool to live there. So, but quickly we realized that with a legal basement apartment, which it just happened to have, that we had some more money at the end of the month, which was something really new for us. I mean, I joked about a trust fund, but I would say at that time I had no idea what a trust fund was, and no idea what money at the end of the month was either. You know, we spent the majority of my wife and I have been together for, I don't even want to say how long, a long time though. And I mean, we started off doing every night it was like maybe some craft dinner. Maybe if we want to switch it up, we'd go to alphaghetti or whatever, and some bread and call it a day. So so it was really, really new to us to have that extra money. And it's something, of course, that makes things click. And if you start to do things right and you start to realize the power that this can have and save up some of that money, and then you can really make it work for you very quickly. So that's what we did. Our second property that we bought was a couple years later before we really realized what we had, right, and decided to make it work for us.
What year was the first one? Like what year was it?
First one was 06.
06. Okay.
Yeah.
So you've been in the game for a while. So you waited a few more years and continue.
06, and everybody at work was telling me, no, don't buy, because we were still living in that place. We just rented out the basement. Don't buy anything else. That's too risky. The water cooler talk was all, what do you think you're doing? Like, you have no business doing this. That's crazy. Who buys two houses? Two houses? You want two houses? Mm-hmm. What is wrong with you? But despite all that, I had started immersing myself into more of a circle of people who did understand that kind of thing. And I had joined Durham REI, which I would say is probably the most, the thing that really made things start for me, where I've learned everything. And my world changed when I discovered Durham REI. Anyone that doesn't know Durham REI, look him up. Quentin D'Souza is it runs that whole organization there, and he's wrote a bunch of books. I've got them all right here beside me, and I would say, even if you can't get out here for meetings, check out his books.
I've got his book sitting on my desk. Yeah, he was kind enough to come on the podcast. He actually made the drive.
I would have made the drive, man. You've offered to do it this way.
Yeah, So you started going to Durham REI.
Sounds good too, though, right?
It does. Yeah. Well, we're both two podcast hosts that have good gear, so we're okay here. This works actually quite well. So you when did you start going to Durham REI? Like what year?
Boy, I don't know. I think it might have been 2011, maybe. Okay. Somewhere around there.
Man,
eight or 9 years ago.
I wish I had known about that stuff. I heard about rain, but I had no idea how important that kind of thing was. I just I was working in the business, so I was learning that way. But man, if I had started back then going to something like that, I probably wouldn't have got burned nearly as much and as often as I did. But hey, hindsight's 2020, and now it's a very different world.
But you know what? When you do get burned, I think the big difference between having the support behind you and not is when you do get burned, which you will, right? Everybody knows that it's not just roses. Mm-hmm. You run into problems and you have to overcome them. And those people that are in those groups, they have went through those problems themselves, and they can at least alleviate some of your stress when they go, dude, you think you got it bad? Let me tell you what happened on my first property. Yeah. Right. And then you start to go, okay, maybe I can get through this. Maybe I don't have to quit because I have foundation issues in the first place, and now I've got water all over the basement, and oh my God, I've got to figure out a way to take care of this, and it's going to cost a bunch of extra money. Anyway, though, that second place was a student rental up top, 5 bedrooms, and a legal basement apartment, and that one was downtown Oshawa, and we made that one work for quite a while, and then it was an old building. It needed a lot of updating. So I did all the updating, and basically I was sick of looking at it. And then I sold it to a friend of mine who calls it his cash cow. So that always makes me feel good.
Well, the University of Ottawa, or sorry, University of Oshawa, Ontario, right? They call it University of Ontario. I'm getting all the names confused. It's like
IT.
Yeah, IT. Although IT is like kind of a given now. They almost don't even need to stress that. With how every university seems to have gone at least to some degree. But yeah, there. The nice thing there was it was so fresh that the bylaws weren't really up to date, and they were letting people pretty much do what they wanted. Initially, because I had a friend that was investing up there, a client of mine, and I was talking to him back in like 2013, and he was able to just add basement suites and add bedrooms as he likes. Whereas in London, we've been restricted, 5 bedrooms max, all that stuff. Was that like kind of an open play? Was that your experience? Was it like kind of like an open playground? You could do what you wanted, or did you find it more restrictive?
Well, we've always tried to follow the rules, right? That's one big thing with me, and I'm a realtor now, only for about the last 5 years. So,
okay.
So that's always been a thing with me, is making sure that people get into something that they can run legally, right?
Yeah,
so
I'm the same too.
Yeah, so we've always had that rule when we were buying things, even right off the start. And yeah, it can be a little trickier. I mean, in Oshawa, they have a regulated area, which is around the school. So they haven't done the whole city. It's more just an area, like a circle around where the school is. So as long as you're outside of that, you can run it like a lot of people do with their student rentals, and just put, as long as everyone's on one lease, then you're sort of bypassing the actual bylaws, I guess, in a way.
Yeah, I've heard of similar things in London too. A friend of mine doing it that way, where you would have, he could legally have 8 bedrooms, but he couldn't operate it as 2 separate units. But as long, like you said, they were on the same lease. I don't know if that's correct. I've never looked into that. But as long as they were on the same lease terms, he would even say you could do separate leases as long as they're the same lease terms. I don't know the technicality of how they did that.
I mean, it's municipality by municipality with that kind of thing. But I mean, even like, for example, we do a lot of student rentals in Peterborough now. Yeah. And like, you can do that. You're not actually breaking any laws doing it that way, having everybody on one lease. But Peterborough has a bylaw that requires you to register any student rentals over 4 bedrooms. Okay. Right. So technically, if you're up to fire code and you've got 6 bedrooms and everyone's on one lease, you're not doing anything but like not adhering to the bylaw. Which is a slap on the wrist, right?
Well, so you mean in terms of registering, if you didn't register?
Yeah, exactly. Yeah,
but can't you register? Can I have, an 8-bedroom student rental in Peterborough and register it?
You absolutely can. Let's not get into that right now. But, that's just work that some people don't want to do, right? Yeah, I don't see any problem with that. I'd rather rest easy at night, and I'd rather spend a couple of extra dollars so that my neighbors across the street can't call and say, hey, we don't like the ruckus coming from across the street. And they look and go, yeah, this guy shouldn't have, students in there. And then they go and they cause trouble for you. So yeah, it's always better to do things the right way.
I agree. And actually on that note, it's a good idea to make friends with your neighbors too. I haven't done this enough with the regular rentals, but if I had like a project where I was going to be renovating, I went and knocked on the other neighbors' doors and just like introduced myself so that they didn't, so they saw me as a nice guy, young guy. Hopefully they had a little sympathy. Hey, I'm just a young guy trying to make it. Not a big bad Toronto developer trying to destroy their neighborhood. I've been called that too. So, just kind of learning the lessons there. Make friends with your neighbors.
That was a headline in a paper for you, if I remember right, wasn't it? Yeah.
Yeah, made the paper. Yeah, not in a good way. Oh man, if hindsight wasn't 2020, right? Like, I mean, just now, like I had CTV calling me, like, would you do an interview? I'm like, no, like leave me alone. Like hanging up. I don't want to talk to anybody. That was the wrong move. Certainly. Yeah. Get out there, talk to people, and show them you have good intentions. I think you end up okay. But enough about me. You're doing all kinds of things, Rob. I know you. So you got in doing duplexes. As I understand it, that's kind of your bread and butter. You have quite a few of those. Do you not?
Yeah. We've done a bunch over time, and I've had different partners and sold some, and I've done a couple flips. But quite frankly, I'm not really a fan of flips. I find that, especially like, I try to look at everything I do, even as an agent, from an investor perspective. Obviously, I work mostly with investors. And so I find that, time in the market. That's always, not timing the market, time in the market. That's something you hear all the time. And it's true. And I think unless you're flipping as your principal source of income, if that's your job, that's great, But if you're going to invest in property, I find that even now, like with everything that we've had going on, and, there's going to be a point where the market climbs back up again, and it's always going to be appreciation is going to outdo whatever renovations you've done over time, regardless of how much money you put into that reno. If you've decked it out, you wait 5 years and you could have sold that property without those renos for the same price you did with it done.
Yeah, so I think I might have mentioned this to you at one point, but at one point, flipping was a big part of my income, and it had a company for it, and with a partner, and that's what we did. And I look back at all those properties, and they're all worth quite a bit more now than when I sold them. And we're talking like property I might have had $60,000 in profit on. If I just kept it 2 more years, it would have been $160,000. So. It's pretty painful to see that.
Look, you could pick probably whatever one of those flips you're talking about, and you would be dead on with those numbers. Most likely.
Close. Yeah.
You're going to be close.
Got to know. Got to know your market, right? You got to know your market. And so it's painful to see it, right? Even though right? Like, the logic was there. Hey, I had a reason to do that. That was my income strategy. It's still painful. So, there's you just kind of have to accept those when you sell them. But I know that hasn't been your game, and I think that's great, and I totally agree. And I'm so happy to have the ones I have. Now, when you add in the whole COVID situation and the way our government's spent, the way they're going to have to tax, or talking about taxing out of this, all the more reason not to sell, because when you sell, what are they going to do to capital gains? Are they going to change it to a full taxation rather than half tax? I don't know where that's going to go, but
sell all your property now. Avoid finding out.
Well, unless they announce it this year later on for the 2020 tax year, and then you just get punished. So I mean, I think that's the big thing, right? When you, like, as you said, if you don't sell, you don't pay that tax. You don't trigger the tax event. Therefore, you're keeping your entire equity intact, and now that can keep compounding and growing for you. Whereas if you sell it, you get taxed. Now you got to redeploy it into something else, and pay land transfer again. So there's all these fees that I think, aside from real estate just being awesome, all these fees that you just avoid is another huge reason to keep.
Absolutely, yeah.
Fees and taxes.
And it's always been one of those things where I wish I was in a position to keep the places that I bought, but either I went into them without a backup strategy to keep it, or B, I've had partners where they wanted out and I just didn't have the means to buy them out. So So those have been the only 2 reasons why I've ever sold the property.
Okay. So what's your snapshot of your portfolio right now? Like, what's that look like? What do you got?
Again, like, this isn't going to be too impressive to those people who are looking for headlines of, hey, how I bought 60 houses in 2 years or anything like that. Right now, we hold 8 duplexes, 1 triplex, and the student rental that we're going to talk about, and another student rental.
Cool. So 11 properties or so?
Yeah, I think 12 properties.
12
Not
properties?
a huge portfolio, right? But
that's a very respectable portfolio, man.
This is what I always want to talk to people about. Like, when I talk to some people who I've met up with through the podcast and things like that, and they go, how come you're not crushing it? Like, how come you're not killing it? I say, I am, like, as far as I'm concerned, I'm crushing it. Like, I've chosen my lifestyle, how I want to live. I have the time that I want to have because I'm not overseeing. Right now we've got 2 rental projects on the go. That's enough for me. I don't need to be looking after 6 rental projects all at once and that kind of thing. So I think it's important to do the whole work-life balance, right? I
agree. Well, and in quality over quantity too, right? Like, if you've got like you just talked about quality of lifestyle, quality of properties too, right? There's apples aren't apples. Like, I could have gone out, you could have gone out and bought, a 30-unit building that was falling apart and, just made you lose all your hair or go gray or whatever. And that wouldn't be an improvement. So, I mean, I to me, like mine's not a huge number either. Mine are, and a big part of it is like mine are like a higher like value per door than most people would look at because they're so heavily renovated and expensive properties in expensive areas. So my number doesn't sound anything special either, but I like you have been very patient. You know, I do deals because I feel they're the right deal, and I don't do deals for the sake of doing a deal.
You know, I'm sure. Have you had Russell Westcott on?
I haven't. I hear his name all the time, and I think I need to.
Yeah, you should talk to him because, I mean, I've seen him a bunch of times as a speaker. We had him on our podcast, and one of his big things was, like he said, when he was first starting out, like people call him the JV Jedi, right? Mm-hmm. So he's got a course on how to raise capital, and he's very good at it. He's been doing it for years. Yeah. And one of the big things he said was, if I could go back, one of the biggest mistakes I had made was building my portfolio too fast. Oh yeah. You know, I bought whatever was for sale. It was pretty much indiscriminate. So, so he's always said, if I could go back, I would take it as a slower pace, slow down, relax, try to, get the quality products. And
yeah, it's a marathon, not a sprint. It really is. Like, so many people are so eager to take action that they just want to get their name on something. And I coach people, and that's what I feel like I need to be doing something. I'm like, you are doing something. Like you're learning this. You can't do it overnight. And I'm going to try everything I can to stop you from making a mistake, because I've made them. You don't need to make them. And I think buying too quickly, like as I told you, I bought in Ohio, like made all these mistakes, made the paper. Those are good ways to lose money. So, being methodical is a lot better than being aggressive and growing too fast, in my opinion, and obviously in yours too.
Well, that's what I was just going to say is it's, I'm not putting anybody down that has a different idea than me. Certainly there's many people that have different ideas of how to do things than what I have, and they're not wrong.
Right. Yeah. It's just our opinion, and what, you and I, we both have to respectively sleep at night. So, if buying too many is going to keep us up, and I realize that in myself, is that if I did that and took that approach and didn't feel like I had the cash assets to back it up, didn't feel like I could respond and manage those as a business, I lost sleep over it. And then I decided it's not worth it to me. It's not worth it to me to feel that way. So, I can totally appreciate that. I know we went down that little rabbit hole there, but I think that that's valid, because so many people out there are just so gung-ho, let's just get that number, and they make it this, this measuring contest with other investors. And I don't think that's the way we should be doing it. Not at all. So anyways, yeah. So out of those, are some of those JVs, or are they mostly yours and your wife's as well?
Most of them are JVs.
JVs. Okay.
Yeah. Most of them are. Okay. I've been really fortunate with that. I think I've just had a way of getting my name out there. I didn't do too much before we started with the JVs, actually. And like I said, like I didn't have a bunch of money. I certainly ran out of capital. I think maybe even faster than a lot of other people in corporate would have. I mean, I drove a truck. That was what I did. Yeah. And still managed to get myself into a position to be a full-time investor and support myself. So, if I can do it there, not coming from a corporate world, as a matter of fact, I think there's a lot less risk involved for somebody in my position than there would be for, we talk to corporate people all the time on our podcast about leaving their job. And I can imagine that would be a lot more stressful than doing what I did, because they have a lot more to lose. They've got, we've talked to people who are high up in Bell or whatever, and they've chosen to leave their jobs. And I can imagine how stressful that would be. So I actually think that I took the easier path of not really having much of a career to speak of, but that I was putting on the line. So, hey, listen, if you're not doing much, you get out there and start buying properties.
Yeah, that's sort of like the situation I was in too, because I had a teaching contract. I was working in the mortgage world, but I was, fully commission based, and I really wanted to be investing in property and wanted that to be like my sole focus. And I'm like, but how the heck do I do that? Being that it was sales, if I wasn't working, I wasn't making money anyway. So it was just like, well, I'm going to focus my energy on this. So it's funny. Yeah. Like, I don't know if it's the right expression to call them the golden handcuffs. Like when you have, like when you're in that type of a job, you don't ever want to leave because you know how good what you have is and how hard it would be to get it back. Whereas for me, the mortgage business, it would really just be about going back out and drumming up leads again, like just going out and reinstigating that. So, I can relate to you there too a lot, Rob. And so when did you quit your job as a truck driver?
I was going to just say, so that's why the majority of our places are JVs, right? Because
couldn't get the mortgages.
Yeah, exactly. So we had to turn to that pretty quickly. So the majority of them are, and now I've sort of found myself in a position where, it's not too hard for me to find joint venture partners, especially when like I said, I'm only doing maybe 2 projects a year. Mm-hmm. So when I find something that works, it's pretty easy for me to find someone to partner with.
Yeah. And the credibility you have from your podcast too. I mean, the amount of people who know your name in this space, I would think most real estate investors know of the name Rob Brake, or they know Breakthrough Real Estate Investing Podcast, I would assume.
Well, it's very nice of you, but I highly doubt that. But but I appreciate you saying that.
Yeah. Well, definitely, I would think you're most certainly the biggest real estate podcast in Canada. Would that not be the case?
I have no idea. Sure. Yeah, let's
I
go
would
with
think
that.
So. We'll go with that.
Yes, absolutely. How do you judge that? I mean, who says?
I don't know. You can look at Chartable. They rank it, but I mean,
I've never ever looked at that. Let's do it now.
I'll send you the link. No, I imagine I've seen you guys on there. You're definitely doing well. So no, that's great. And props to you for starting that so early, right? Because I think you were saying to me that you had been driving your truck, listening to the American podcasts, and you just wanted to hear Canadian content. And since you and Sandy were just talking about it whenever you met up, you're like, hey, why don't we just record that?
Well, yeah. The funny thing was, I would call Sandy probably every day and talk about real estate stuff. And, the ideas that we kept bouncing back and forth off of each other, it was just like, maybe we should record this. So the idea wasn't to have guests on at the beginning, actually. The idea was more to take what each other has learned and share it with each other and help people that way, right? But it quickly turned into an interview podcast. So every once in a while, we will do one where there's no guests, but most of the time we have a guest.
Yeah. Eventually you kind of crush out all the ideas you had fresh and you want to get some more ones on there. But I find like the banter you get, just throw a new voice in there. So, someone bring up a couple new topics and then now all of a sudden you're still having a conversation. Like, I don't know, maybe some people are annoyed by it, but my podcast is just always like a conversation. Like we're just back and forth.
Well, I like this. This is great. Yeah. This is the way that interviews should be, right? It's just it's a conversation and it flows. Yeah, it's not you going, it's not, and we try to avoid this too, but it's not like,
read off your question.
Number 1, what is the biggest mistake you have made in real estate investing?
Well, I like to go where it takes.
Too, but
it's true. And in fairness, because I don't take that approach, I probably do miss some opportunities to ask questions. So it is a trade-off, but it's just what I like. So I'll just stick.
How long do you want your show to be? Can't ask every question to every guest, right? So
we can have repeat interviews if we don't get to all of it. So I can appreciate that, like you and Sandy, like both show like this incredible amount of growth, right? Like you look at what Sandy's doing and all the projects they're doing in Hamilton. You guys both went the realtor route, obviously. Taking what you've learned and helping other people with it. And I can imagine how many ideas you guys helped each other with. Like, does anything stand out like in that dialogue early on, like things that you guys shared with each other that really made a difference?
Well, I think it was the support as wholesalers really that got us, that was really the turning point for both of us, because that was a key thing too. Both Sandy and I, some people do it. Some people do it to a big level now. There's a few names that I'm sure that are that are wholesaling, and they're just crushing it. But back when I was doing it, there wasn't too many people going that route. And Sandy and I both started that way, and we both actually did pretty good. And that was actually how I found Durham REI. Going back to that, was I was looking to try and figure out, can I wholesale? Like, can I go and offer to buy someone's house and then just go to Andrew and say, hey, Andrew, you want to buy this house that I'm like, can I do that? And so on the Durham REI website, I think, or on their landing page or whatever it was, can you buy money with no credit and no money? Yes, you can. So I'm like, okay, I need to go find out about this. And and the first meeting that I went to, Sandy was there. So that's how I met him.
Okay. Yeah. Was he wasn't in Hamilton at that time, or he was just making a really long drive?
No, he grew up in Uxbridge.
Oh yeah, that's right. Yeah.
So
I did ask him these questions, but yeah, so that's, I mean, I would love to come out. It's just like, that's like two hours for me, or an hour and a half. And oh man, I drive enough.
Yeah, I know the feeling. I'm always driving the other way. So that's the
towards
big issue,
Ottawa?
right? Well, out towards Peterborough. So.
Oh yeah, that's right. That's right. Yeah. And what are you, about a half hour from there?
About an hour, actually.
An hour? Yeah.
Yeah,
So
about an hour.
So you've got a lot of driving in your life as it is, then. You're
The
probably
majority
out
of
there.
my business right now is up there. So
Yes, you're up there almost every day?
at least 3 times a week, I would say.
Yeah.
So, and then you add showings in there, and that makes for a pretty good day right there.
Mm-hmm.
With the
Now,
driving.
and all your properties are up there, your personal holdings?
I have 2 properties there. I've got a couple in Port Hope, if you know where that is.
It's along the 401,
Cobourg
right?
area.
Yeah.
Yeah, it's
Cobourg.
it's about 40 minutes east of here, and then the rest of mine are in Oshawa.
And you live in Oshawa, is that right?
I live in Oshawa, yeah.
Yeah. Okay. So you've been there for a fair, like the whole time, pretty much? Like, is that where your first property
since
was?
We started, yeah. And we still own that one, which is great. That one,
yeah, you still own that one?
Yeah. Don't think we'll ever sell that one. We bought it for $145,000. Legal
It's probably
duplex,
worth
3,
like 600
up,
now.
2 down. Well, I've refinanced it a bunch of times since then, right?
It's your piggy bank.
Still haven't over leveraged it. Yeah, absolutely.
Yeah, that's
So I mean,
that's the beautiful part. Like when inflation's taking all your money and like everything, your dollar doesn't go nearly as far, your property keeps going up in value, so you can just keep borrowing money on it and keep growing.
Well, there's the proof of the time in the market right there. I mean, I think we've literally refinanced that house 3 times.
3 times
to pull it out, to
buy
pull money
more,
to go buy something else.
Now, is that your JV structure? Are you usually bringing in part of the money, or are your partners?
Usually.
No. Okay. So were those ones like ones that you and your wife found a way to buy on your own, or you just wanted the cash liquid for some other reason?
I mean, some of my JVs are different. Like they're really, again, with JVs, and people ask me this all the time, is like, how do you structure a JV? Like, what's the right way to do it? And of course, there's no answer to that question, right? Like it's whatever everyone's comfortable with, right? Whatever
you can negotiate.
If that person is getting what they want out of it, you need to figure out what they want. Right. So some of mine have been structured differently where I have put money into them. I try not to, but I have. And so, that in those circumstances, that's more than likely what we would have put that money into.
Yeah. Okay. No, that definitely makes sense. Again, it's all what you're bringing to the table, right? Like I imagine now it's much easier to just like, well, this is what we do. Our partners bring in the money and go on the mortgage, and we handle everything else. And
that was quite hard actually in the first place, because I went from, like we were talking about, wholesaling to now trying to go to those same people that I was wholesaling to and ask them, hey, do you want to partner on this? And they go, well, no, heck no. I mean, it's a lot cheaper for me to just buy the house from you. But I don't want to give you half of it. So that was a really tough transition. And I mean, I know some other wholesalers that even right now are going through the same thing. They want to start holding on to some of these properties, and the resistance that you get from the people who regularly look to you for deals is incredible.
Oh yeah.
They don't want you out of there. They want you to stay right there. So, I mean, you've got to find other means. Those aren't the people that you partner with, by the way.
It's heavily discounted in that regard, right? Like, I mean, if your wholesale fee is 10 grand or 20 grand or what have you, versus you could take half of a flip and make 40 or 50, you'd obviously prefer that.
Absolutely. Yeah.
Or half of the burr and keep it.
Exactly. Yeah.
That's the, the absolute best way. And I think that as an investor, like it would probably feel a lot better to you, Rob, to know like, hey, I've only got my sweat in this, so I'm okay that I only own half of it. That somebody else is on the mortgage, somebody else is put the money in, and I'm the guy running it. That seems fair. Like that really works for my time. Do you feel that way about it now?
Oh, I absolutely feel that it's fair. I find that it's almost harder to sleep, though, to be honest with you, when I'm dealing with somebody else's money. And if it's my own money now, especially now, because I'd be like, well, I know I'm doing things right. I know I'm dealing with things, and I don't have to explain myself to anyone. But when you are using someone else's money, it's harder to sleep at night, right? You want to do everything right. You want to give them what you've promised. So it's quite stressful in that way, I find.
Yeah. And the accountability to multiple different people as well, right? Like that's a business, just investor relations, right? Are you dealing with multiple investors or just multiple repetitions of the same investor? Like the same investor getting
a little bit of both.
Yeah.
A little bit of both.
Yeah.
Like, so I've got the 2 properties going on. I got one, we're doing a BRR or BFRR, whatever you want to call it. Buy, fix, refi, and rent. That's how I learned it. Anyway, we're doing one of those in Oshawa right now. And he's a repeat JV from last summer. When we did one of the same type of deals. And then the other one is a new partner.
Okay.
So, yeah.
And now each time, now you got to know that person. Hopefully you already have a relationship with them so you kind of understand them and how they operate, right? But now you got one more person that you're talking to on a fairly regular basis, I would assume. Yeah,
and you've got to figure out exactly what they're expecting of you.
Yeah.
Just because one person's expecting one thing, it doesn't mean that other person's expecting the same, right? Somebody might want to be more involved in the property, which, I mean, it all depends. It all depends on what you need, right? Like, I would rather somebody not want to be involved in the renovation process and just say, okay, call me when it's done and let's pull some money out of this thing and move on. But some people want to be a little more involved.
That's challenging, right? I mean, but I get it, like, because those people probably want to learn and maybe one day do it themselves. And maybe they're not the ideal target for what you're looking for, because you'd probably just, the same person that's going to, buy 5 properties with you. And then they're good.
You know what, though, at the same time, I've always enjoyed like teaching people or letting them learn. And quite frankly, those people that don't want to know anything, I almost go, why don't you want to hear? Like, don't you want to know what's going on? And they're like, no, I don't want to hear. It's like, but we did something cool. No, it's okay. Just, tell me when it's done.
Those are the perfect people who can just sign a check and take an interest rate instead of owning half the property. If all they want is just to see cash in their bank account, then and that's been my experience anyway. They work well.
Maybe I just talk too much.
Hey, you want half my profit? No, I guess you still have the challenge with getting the mortgages, though, right? You still, that's still going to be the big one. But do you see? We're going to get into that deal in a second here, but do you see a change coming for you? Like you're already 12 properties in, and are you hitting your cash flow goals, or are you kind of looking to scale that up at this point to try and increase it, or you just want to keep going slow and steady?
Well, I think my cash flow is actually going to go down because my intention is to refi till I die. I didn't make that up, but I stole that from Jason Hartman, who has a great podcast out of the States as well.
Okay.
And, so when you do that, obviously your cash flow suffers. So, I'm still working, right? Like, even though I'm doing something that I love, I've still got a job. My wife's biggest complaint about me is that I never switch off. If somebody calls me at 9:00 at night, I answer the phone, which is it is a bad habit. Even though I get to make my own schedule, I find that if somebody calls me, I go, they must need to talk to me, so I want to answer the phone. I have some crazy urge that I just can't not do that. So I'm still working a job, and I make good money at this job, even though I'm helping people and doing my investor thing.
But it's complementary business, though, right? Like, it teaches you what you want to know anyway.
But that is covering my lifestyle, right? So in order, I want to scale, but I think I'm pretty comfortable doing what I'm doing. It's not like I'm the guy going, I want to. Although if I did find the opportunity of that 30-unit building you were talking about, the piece of junk, I probably would buy it.
Yeah,
most likely.
Well, okay, and I meant, like, there's areas in London, and I'm not going to name them, that traditionally have been quite bad and had houses with really, really poor build quality. Like you could just tell the carpenters that built those houses didn't care as much. Back before the days of inspectors, it was just, hey, I think this will work. That was more what I'm referring to. Like 30 units, you probably aren't going to find 30 units that poorly built. So that's probably a bad example. But
okay, no levels or squares involved. Is that what you're saying?
Yeah, no levels and squares. Slap it together. I mean, I've seen it. I've owned it. Unfortunately, like you see it. Like clearly, the people who built this didn't care. And even though it was 100 years before, and I really try to avoid that. So that buying in areas that are fundamentally flawed, buying buildings that are fundamentally flawed. Those are the things that I think give people gray hairs. And I got enough of them coming in on my beard already. I don't need any more of them. So
yeah, I see one.
Yeah, you can probably see a few. Anyways, well, let's talk about this student rental you bought. So that's a new challenge that you're going to have. But of course, you've got good contacts in Peterborough. Actually, I interviewed Jared Henderson not too long ago. And,
good guy.
Yeah, he was singing your praises. So you must be doing something right. Let's talk about these numbers. Okay, so you sent me a PDF, but we're going to talk through it anyway. So you got a property here that you bought for $555,000.
I'm trying to bring it up so I can follow along with you, and oh, here we go. I found it again.
You really came prepared. No one does this. You know that, right?
Is that right? I thought everybody did this. That's why I scrambled to get this together for you before I came on, because I'm like, you talk numbers all the time. I better have something ready for you.
It's always back of the envelope. So no, it's okay. I appreciate this though. No, it's what you can remember, right? Like you're usually going to be reasonably accurate on your stuff. So anyway, so you buy for $555. Are you figuring like you're going to be spending some money here to renovate?
Yeah. So here's a good example of what we think is going on anyway. So I initially got this one under contract beginning of March. And, things hadn't hit quite yet. So our plan at the time was to just run it as a 10-bedroom student rental. Okay. Right. And now with everything changing, although I do think that this is a much better plan, is we've decided to add a 2-bedroom apartment. So they had like sort of a what they call the condo loft area above the garage, which was essentially an apartment on its own before. We were just going to use it as a room because it was part of the house. But now we've decided to, because of everything that's going on, we want to make sure that we're covered a little better, right? Like a unit will rent, regardless of maybe whether or not the students are going back to school or whatever. Some of that stuff is still up in the air. So we figured the best idea for this was to go ahead and add the second unit, which we weren't originally going to do. So, and it makes our numbers look way better. But there's a lot more money that goes into it now. And
so what do you think you'll spend, like as a whole?
It's actually not going to be it's going to be really good because everything's already in place. We're basically adding fire separation and a stove into that apartment. Really, is all we have to do.
Okay.
I'm dumbing it down a bit, but
yeah. Well, that's the way I like it here. Just back of the envelope, kind of like generally, this is what we're doing. This is what it's going to cost.
So it's going to be about, and then we're fixing up some bathrooms and doing some flooring and painting and all that kind of stuff, right? But so we're looking at about $50,000 probably.
$50,000? Yeah, that's not bad at all.
No, it's not bad at all. I mean, because when you compare it to doing a basement apartment from scratch is usually in around like the 85 to 100K mark, depending on what you've got to do on a bungalow. So I mean, this one was already done for the most part. We're not doing a whole heck of a lot other than fire separation.
And zoning has no issue with you having, so you'll have 9 bedrooms in one unit and 2 in another. Is that right?
We're going to have 10 bedrooms.
10 in one?
Most likely going to have 10 bedrooms in the one side. We're going to have at least legal. 9, most probably 10, and then the 2-bedroom apartment. So what you've got to do there, and we can talk about this right now because I think Peterborough is one of the best places that you can invest in right now. If you were talking to Jared, like you said, I mean, he raves about it.
Yeah, so, he really likes the numbers there. He invests at a distance from Montreal. So
that's right.
Obviously, he knows what he's into.
Exactly, and I think he's got 4 or 5 properties there now. Anyway,
seems to be what I hear. Peterborough is like the hot spot in Ontario. Really, I hear more people rave about Peterborough followed by a close second, which would be Welland. Those are like the two markets that I hear people just like kind of rave about.
I'm not trying to hide anything from anybody, but when Canadian Real Estate Wealth magazine put out their top places to invest, and Peterborough wasn't in there last year, I think, I was like, yes, because I get to introduce people to this, right? It's undiscovered territory, but I think it was in there this year. So they've got a really unique thing that they are doing there, is where they allow you to register up to a 10 bedroom, provided it meets fire code and all that kind of stuff, right? You're not overcrowding the space that you've got, up to 10 bedrooms as a student rental, and you can register that with them. So they call it a large dwelling unit. It's not a rooming house. They've classed it as different. You can have it in an R1 zone there.
Okay.
And then there's different processes that you have to go through to get that. Right. So what we're doing first is we're separating and adding our legal accessory unit, which you're allowed to have up to 2 bedrooms in an accessory unit. And we're registering it as a duplex, and then you go and register the other side as a large dwelling unit.
Oh, okay.
So everything's totally above board here. And I mean, you would think that they would have something against that, but it's actually encouraged because of the shortage of rental units that they have there, and the shortage of room by room units that they have because of all the student rentals that they need. So again, I'm not exactly sure how that's going to look this coming September. But in the long run, I'm not scared of this. And I have one student rental there right now, which is 6 bedrooms registered, and it's full for this coming season. It was full as of the beginning of May, which is good. There are some of my other clients who have, a few rooms vacant, and some with some issues where if the other students were moving out, the existing students didn't want other people to move in because of everything that's going on. So, I certainly am not going to tell everyone that everything's great. Don't worry about it. It's fine. Just, there's extra precautions that you need to consider in this time, as with any kind of investing, right?
Yep. And I've been saying this too, and I'm not in any hurry to make a move right now because, my student rentals are pretty specific, and I like London as a market, for me, that I can pivot, I can serve, I can service homeowners, or families. However, the rent for families is not going to be as much as students are paying. So I'm very fortunate, and then I have leases running until the end of April. However, if we're not back in business by, hopefully January at least, it could get uncomfortable. And at that point, hopefully Airbnb's back up and running, and most industries back and running, and I could Airbnb out rooms and things like that. So there are ways, but it could be a lot of headaches. So you're absolutely right to point out that there's always risk. And in the student game, it was one of those things I took for granted as students. It's like pure gold. Yeah, it's a pain in the butt to manage, but it's like gold. It's like the one thing, hey, schools aren't going anywhere. Well, somehow schools went somewhere. And, Gary Vee, of course, says, people can learn on YouTube and you don't really need school. And I don't agree with his philosophy entirely, but I do see where he's coming from. And for those certain motivated people, there could be a shift long-term away from school. So for me, I'm looking at it thinking, how can I hedge myself so that if I am in student rentals, I can pivot and use those as family rentals, or I can repurpose those, investing in markets where that'll allow me to do that. Do you feel like Peterborough allows you to pivot if you need to? There's, families that want to be there as well.
Oh, absolutely. And since the whole point is to sort of make ourselves adverse to this kind of thing happening. Any student rental that we generally look at, would be the same thing exactly that we would look at for a BRRRR. Okay. So a lot of the people that are buying student rentals there, they'll buy a bungalow, a 3-bedroom bungalow, and then it's got a rec room and another bedroom downstairs, and you split the rec room into 2, and now you got 6 bedrooms. It's really nice and easy, but at the same time, if they decide, this was my spiel for the last 2 years. If for some reason student rentals dry up, you've got the option to add that second suite. Yeah. Right. So
that's great. Yeah. That's what you need.
Yeah. And that's always what we look.
Okay. So let's crunch through some of these.
I mean, I wouldn't say it's No, sorry. Go ahead.
I was gonna say let's get into some of these numbers, but finish your thought. Yeah. You want to finish your thought first, or just keep going to the numbers?
I forget what it was now. You interrupted.
Oh, I'm sorry. Okay, so you said house insurance is $282 a month, so that works out to be so about $33.84 a year.
Yeah, see, that was pretty pricey. That was something.
Yeah, that's higher end. Yeah, that's higher end insurance.
Yeah, we've got to make sure that we're covered.
Yeah, and with student rentals, like I think a lot of people think, you know, oh, we'll just tell them it's a family, but if you don't disclose it's students, like you're not even covered. So don't do that. So property tax, you've got $432 a month. So I'll just get that into an annual figure. So that's
down. It's actually a little lower down there. You got it on there somewhere.
Yeah, property tax at well, it says $432 a month.
Oh, no, down at the bottom, $51.81.
Yeah, I have $51.84. Whatever, numbers are close enough. So maintenance, what kind of number would you figure for your maintenance? Like 8% or 5%?
I don't know. I just put $350 in there because I figured I had
$350 a month.
Yeah.
Okay, so let's just see what that would work out to be. Yeah, so $350 a month is probably closer to 5%, 4 or 5%. I'll just leave it at 5% for now. I like to use that number. Management, I see you had 9% in there. Is that that's what you pay? What does that include? Like, is that
it doesn't include lease up? No. So
it doesn't include lease up?
No. So they'll charge half a month for lease up.
Do they cut lawn in that number? Like,
no.
No,
that's part of the maintenance.
Yeah, I know. No, it's just Jared was giving me numbers where he's like, oh, for 8%, or I think he said like he was getting leasing and renting out of that. I figured you guys would have used the same guy.
And well, that very well could be. And I've got a bunch of different property managers that I am aware of from the area, and they're all, they have different things going for them. So the one that I use is because I trust them the most, right? They're definitely not the cheapest.
And I am like really big on like, don't just go for the lowest price. Like that's like probably the worst thing you could do because you can get yourself into a lot of trouble by doing that. So anyways, let's look at your utilities. You're figuring $600 a month, which that seems reasonable for the number of bedrooms you got there.
So, and that's only for the, that doesn't include the apartment. The apartment's going to pay their own utilities.
Okay. So the apartment will pay their own. So utilities at that, management at 9. So lease up, you're not going to have any issue, or you're not going to have a cost there because you're paying, or you're doing it yourself? So
I'm doing it myself this time. I'm not really super pumped about it, to be honest, Andrew. I didn't want to do it, but after speaking with my partner and trying to figure out the savings there, it's pretty significant, right? So
it's huge. And especially like, I just think like if you're going to be in the business of student rentals, you can build a relationship with a rental agent and, maybe have them do it. I've done that. I've also rented myself. I like the idea of being able to rent it yourself, or at least have some contact with the student first, because then they sort of form a relationship with you. And they'll see, hey, Rob's a good guy. I like him. He's very reasonable. He seems like he wants us to have a good house. Like, let's treat him fairly. Whereas if you're, just some property management company, not saying that, there's anything wrong with yours, but you don't take the personal time maybe with each group that you might if you own the place.
And trust me, it has nothing to do with me not like. The good thing is that I'm there quite a bit, right? So it is an hour away, but I'm there quite often. And what I will generally do is I'll just book everybody that I can for like an hour window when I'm going to be there. And I can do that 2 times a week or whatever. And I should be able to fill this pretty quickly. And we are renovating right now, so everything's vacant.
Yeah. Okay. Okay, so what about lawn cutting and snow removal? Obviously, you're going to have to probably do some of that.
Yeah, so that's in the maintenance.
Oh, that's in your 4% number, your 5% number. Okay, I usually would just separate that out. Like, I'm thinking maintenance more like, what about your painting on an annual basis? Like, this door got broken, this toilet's leaking, that kind of thing. That all fits in $4,700 a month or a year?
Well, hopefully. I mean,
I'm making you question.
I'm trying to get the right students here, man. I don't want them ruining stuff on me. It's
going to be relatively newly renovated.
Yeah, that's just it. I mean, we're spending a bunch of money on it now. I mean, look, these numbers can change, but right now, $350, I think, for the year after everything's fixed up is going to be pretty reasonable.
Yeah. I'll play devil's advocate for you here. I'm going to put in $1,200 a year for lawn cutting, and we'll just see how good your numbers look anyway. Let's do that.
Yeah, go ahead. I mean, I'm sure that they're fine. But $1,200, yeah, for maintenance. You're talking snow removal and lawn cutting.
Yeah, like $100 a month. I'm sure you could find somebody to do it for that.
Yeah, that's fair.
So you're going to be, you bought. So let's just call it. Are you thinking refinance on that?
No, we won't be able to refinance this. No, it'll be money invested.
Okay, so you'll be in for 605 after your renovations. So your cap rate, for anybody who follows cap rates, will be about 10.59%, which is disgustingly awesome. So that's that for Ontario. That's unheard of. And I didn't miss any other expenses, did I there, Rob? Like, before I oversell you here.
We always miss something, I'm sure, but...
So utilities and internet, so here's what I got here. I got taxes at $5,100, insurance at $3,384, maintenance at $4,700, management at $8,478, which is 9%, utilities at $7,200, which is $600 a month, lawn cutting $1,200 for the year, and then like you could always throw in $500 for miscellaneous, whatever, maybe your bookkeeping software or what have you. But sure. We'll just throw that in there because these numbers already look so great. So 10.5% cap rate for anybody who pays attention to that, and that's with $605,000 value. So your gross rent it averages roughly $655 a bedroom across all of them for $7,850. So that's your gross rent. So as far as we talk about 1% rule, well, you're over 1% rule here. You're like 1.2%, and your mortgage at 80%. Well, I guess you wouldn't be able to get 80% of that. You'll be 80% of the 555
the purchase price, but yeah.
Yeah. So let's just see here. So it would be that 80% times 555. So you'll be about 444,000. Are you doing the 30-year amortization on this?
Yeah, it's a 30-year. It's variable prime plus 0.2, currently 2.65.
2.65. Okay, so your cash flow then is $3,500 a month.
It's not too bad.
One property with $3,500 a month. That's pretty unprecedented.
This is a unicorn. This is a unicorn. Let me tell you something about this. I didn't just grab this and say it's mine. I showed at least 10 investors this place. Yeah. At least 10 investors. I walked through with them, and nobody was interested in it. And I remember saying to him, I was frustrated because I wasn't necessarily looking for something else, Andrew, at the time. I was, I'm mid-reno on the other place, or we had already bought it. And I was saying to my wife, I'm like, I just don't get it. Why does no one see what I see in this place? What is going on? How come, why isn't it sold yet? She goes, well, it sounds like you should buy it then. So when you get a green light like that, you can't really not do it, right? So
that's the best way to be a realtor, by the way. Be willing to buy what you're showing your clients. I love that.
I would say that these, like, if you look at some of my rooms are at 500 and 550, like quite a few of them. Mm-hmm. And then I've got the one, which, is basically a suite on its own. It's got a sunroom. It's very large. It's probably about 18 by 14 or something like that. And then it's got an ensuite bathroom. Mm-hmm. So that one I've got at 800, but I think a lot of these, and I like to be conservative, I'm hoping to get at least 600 for each of these rooms. 600, but
well, over 12 rooms, I averaged out based on what you were saying here, 7,850. You'd be around 655-ish per room.
So that's average. I think I can bring it up though, is what I'm saying.
Yeah. So I
put the lower end.
This is potentially a property that you could retire on. I mean, if you could really manage your expenses, and just live really, really frugally, I know guys who could live on that. Like they could actually literally just manage one property and not do anything else for the rest of their life, which is actually just a really cool idea. I don't know why I find that so entertaining, but I do.
Oh yeah, that would be fun actually. I mean, where you can go to the Philippines or something like that, right? I do know people that do that.
You got a property manager. Take that money, that Canadian dollar. Czech Republic. I hear that you can live like a king for $3,500 a month.
That's really nice.
Yeah, there you go. I mean, the options are just endless. Okay, so looking at your return breakdown here. I have my little spreadsheet here that calculates all this, so I'll just tell you. So you got $52,000 in mortgage pay down over the 5 years, so that averages out to be $10,500 per year, and that's actually using my amortization chart here, so that's relatively accurate. If you get 4% appreciation, that's $2,400 a year. I don't know if you will or won't. Maybe we'll just say 3 to be conservative, and then you'll get your cash flow, which is $42,000 a year, which, rarely is cash flow the biggest contributor out of the 3 ways you get a return here. So you get your mortgage pay down, your appreciation, and your cash flow. Your cash flow is $42,000 in the year. That's wild. That's like really crazy good. That's a 24% cash on cash return. My sheet's calculating here. I'm just going to make sure that's accurate. Yeah, that's pretty crazy, Rob. Like, people aren't doing that in Ontario. I think in Ontario, that's probably the biggest number I've heard.
Like, I just want to say, this is an absolute unicorn. I'm not even going to pretend that this is something that I could find again probably ever. And you know what? At least even for now, I would imagine there's going to be some vacancy in those rooms. So even if we're half right, we're still doing okay.
Yeah. So I'll give the number as is, and I'll just tell you how it changed. So that's a 41% return on investment. So your investment would be your down payment, which is pretty substantial. Down payment and renovations about $161,000, and then you've got land transfer roughly $8,000, $1,700 for legal fees. So let's call it $170,000. Downstroke, but your investor is paying that. But we'll just look at it as if anyone bought it. That's still 41% return on investment. Like, where can you do that? And if we go crazy and we have crazy inflation here in Canada after all this craziness with the virus, that number is just going to go up because your appreciation is going to go up. So, in the long run, maybe not in the short run. No one can guarantee anything, but yeah, if you have, say you have 5% vacancy, for some reason, your cash flow goes down to $3,100 a month. So, what if you had like 25% vacancy? Let's just see here. You still cash flow $1,500 a month. So, talk about a property that's pretty well hedged.
And not only that, they left me a pool table in the house.
Table, a slate one, or is it
no, it's
one of the plywoods?
One. No, it's nice. It's got all, it got very nice woodworking legs.
Amazing.
It's not just straight down.
And the kids are obviously going to get
it's
to
a very
use that,
technical
right?
term I just used there.
Yeah, no, that sounds wonderful, man. Okay, so this is
leave it there, unfortunately, though, because I don't have room for it in my house.
Yeah, I was about to say you're going to have to leave that for the students.
Yeah.
So that's a grand slam deal. I know what you're saying. Like, those don't come around every day, but congrats for finding that one. That's amazing.
And that was a heck of a ride to get it too. We won't even go into that. I don't even know if I can talk about it right now, to be honest with you, but
the seller wasn't cooperating?
It had nothing to do with the seller. That's as much as I can say.
All right. We won't dig then. Rob, so I don't want to keep you too long here, but if you had anything that you wanted to share, kind of like words of wisdom, something that, a lesson you've learned along the way that you'd like to pass on to somebody listening or watching this, what would it be?
I think it would have to be to give yourself a timeline to learn and then take action. I see too many people that will join clubs or come to me and say, I want to do something, and then I'll see them, who knows, like 6 months later, and they still haven't done anything. So I'd say it's important to set a timeline for yourself and then go and take some action, because, even those people that we've talked to, I would say the majority of them consider their first property something that they wouldn't have bought if they had to do it again. But that being said, they would never say it was a mistake. So it's important to go out, take action. You're always going to benefit, even if it's just from learning, maybe losing a bit of money.
Yeah. And, to that point, I certainly like that you said, put a timeline on it. I think that is necessary. I love that you said that a lot of people regret their first property well, they wouldn't regret buying it. They wouldn't necessarily say they would have changed it, but they don't like that property anymore.
They wouldn't do it again if they went back and knew what they knew.
Wouldn't buy it again now. And that's how I feel about my first. Absolutely would not buy that again now. Not a chance. But maybe for that price, in all fairness, if it was that cheap. But
if it was still the same price, we all would.
Yeah, exactly. But because then you could just resell it. But yeah, I'm right there with you. I think that people can make mistakes, but if you deal with people like Rob, or you deal with real estate investors that are already in this business, they can help you hedge your risk, at least hedge that downside. If you are going to lose a little bit of money, it won't be that much. Or I don't propose losing money. I think there's a way to engineer a deal that in the worst case, you're still making money, even if it's just a break even or close to. But definitely I would say, like, just to add to your point, definitely take action, and then deal with people like you, Rob, that realtors or investors combo. The people who do both are really ideal to work with, in my opinion.
Awesome. Well, thanks for having me on. I appreciate this a lot.
Yeah, man, I appreciate you letting me grill you for some numbers. I know you were anticipating it.
I see your previews on Facebook, and it's always like, here's the numbers for this, and look what you've done. And I'm like, oh man, I guess I better get something ready for him. So he's not asking me for numbers, and I'm scratching my head.
No, yeah, that's great. This is a great deal. Yeah, I know people are going to be excited to listen to this. So Rob, where can people follow you? I mean, I know you got the podcast. Tell us about the podcast.
The podcast, you can look up just www.breakthroughreipodcast.ca. We're on iTunes, of course. You can find us there. But the best way to reach me is just rob@mrbreakthrough.ca. It's all spelled out, no THRU. It's THROUGH.
Awesome.
Yeah.
I'll put that in the show notes so that people can reach out to you. And any other social handles we should give them, or that's the main way
you can find me on Instagram too.
Okay, perfect.
I just mostly put podcast updates on there though, and pictures of my kids. So if people want to see pictures of my kids, we can go over there.
That's nice too. All right, cool, man. Well, I appreciate this. That was great to finally get you on the show. And man, I'll definitely be looking for some updates on that deal. Sounds like a good one.
It's been fun. Thanks a lot.
Thanks for watching today's episode. Just a friendly reminder to please rate and review this podcast on iTunes. If you're watching on YouTube, make sure that you smash the like and subscribe and notification bell. And also leave a comment. And hey, while you're at it, why not share this episode with somebody you think it could help? It helps this podcast grow, and I would really appreciate it. Thanks again. We'll see you on the next episode.